Brace yourselves because the Calgary real estate market is on an all-time high. We are hitting prices of 570,000, and in this video we're going to break down the data and see what's going on behind the scenes and why Calgary might very well become the next Toronto. Hi, it's 𝗖𝗵𝗽𝗀, your favorite Calgary realtor, and if you're a buyer, investor, or seller, make sure you book a call with me. The link is down in the description, and we can go through your personal situation because there's no one size fits all, and we can look at the data that specifically suits your needs and get you all set up. Before we start, this is the market report that I go through before recording this video for you guys, and I go through and put in my personal thoughts, opinions, mark out all the important data that you need to keep your eyes on, and guess what? I make this available for you to download so you have your own personal copy to reference and go through. So if you would like this copy, which has been very popular, a lot of people downloaded it the last time, make sure you find that link in the description, go there, and all you need to do is just get the free download and it's all yours. All right, to kick it off, first we're going to look at the summary from the Calgary Real Estate Board, what they have to say about the Calgary real estate market. As you can see here, August sales have reached a record high with 2,729 sales. The sales to new listing ratio is elevated at 87%, and this is one of the major causes around the country but also in Calgary for why the prices are on the rise. Inventory levels in August dropped to 3,254 units. Not only a record low for the month, but well below the 6,000 that we usually have around this time. So conditions continue to favor the seller, driving further price gains. As you can see here on the right, we are hitting 2,729, which is 27% higher. So our inventory is lower than last year, but guess what? The demand is higher. So we are pushing in two completely opposite directions. Something I like to do is look at the month-over-month data and not just year-over-year. And as you can see, compared to last month, we were at 2,647 sales, and now we are at 2,729. So the demand is not slowing down, it's not going anywhere. So it's becoming a very tight market, and if you want to get a home, now's the time. Now looking at the price range for the different house types, depending on which one you're looking for, the total residential is currently sitting at 570,700. Our detached house prices are at 696,700. Semi-detached at 623, row townhouses at 413,200. We remember when we hit that 400,000 mark, that was a record, and now we've not stopped after that. We are going even higher. Townhouses are 413, guys. Like, things are so expensive. Apartments are at 309,000 now. So overall, we are 7.9% higher year over year. But the detached and semi-detached are roughly 10% higher than last year. And a lot of the price gains are coming from your townhouses and apartments. Like we've seen a trend over the last 4 months. People are getting now priced out of the detached and semi-detached market. And people are flooding to the townhouses and apartment prices that are leading to these price gains. And so if you're looking to either sell or move up, now might be the great time to capture that equity. Also, if you're looking to move in, then now is the time to buy because it's just going to get more expensive. So we are sitting at 15% higher than last year and 13% higher for the apartments. As far as the new listings go, we are 3,131, which is 15% higher than last year. Not enough to keep up to the demand. And the inventory is 3,254, which is 32% lower than this time last year. So not only do we have 27% higher sales, we have 30% lower inventory. That's a 50% gap. And so we clearly do not have enough properties to keep up to the demand that we have in this market, leading to our months of supply to come down to 1.19. Last month, our months of supply was at 1.32. So this number is dropping. And what does this mean? Basically, if no new houses come on the market, every single house in the market will take 1.3 months to be sold. And as far as this month goes, that's sitting barely above a month. So within a month and a little bit more, everything on the market will be sold. And that's called your absorption rate, and that's how quickly the buyers are absorbing the properties off the market. Looking at the month-over-month price trends, guess what's happening? Since Jan, as you can see, there's been constant price increases. So we started the year out at 520,000, and now we are sitting at 570,000. So that is 50K more than Jan. So in a matter of 6 months, we have gained essentially 10%. And so you can see the longer you're waiting right now, as far as this year goes, we are showing no signs of slowing down. Inventory is dropping extremely quick, and that's how the market has been trending. And so as far as the total inventory versus sales goes, we were getting a bit more of a gap between the inventory and sales, but I was attributing a lot of that to houses that were being listed above 700,000, and some of that did get absorbed, and a lot of houses below 700,000 got absorbed. So now we are starting to close that gap back again, which is putting more upward pressure on prices. We had a pivot back here, and it's being maintained. That we wanted to see if that trend would be maintained or we would start peaking out and dropping back down. But clearly the benchmark price is starting to just shift in a different direction, but it's still on an upward trend, and we're seeing positive gains month over month. The real question is, will this trend continue? And my answer is absolutely yes. And I want to break this down because this is extremely important to understand how the macroeconomics and microeconomics work, because Calgary does not operate by the same rules as the rest of Canada. We do have different tailwinds heading up for this market. So the first is interprovincial migration. Interprovincial migration is at an all-time high, both from Vancouver and Ontario. A lot of clients are looking to move here, and that's just going to put constant upward pressure. Everything has become so unaffordable in Canada, and houses being one of the largest costs on the month-to-month basis for a lot of people, they have decided to make the move that's good for them and their family. The second factor that's going to keep driving these prices up is the lack of inventory. A lot of people are locked in at those low interest rates of 2022. So by the time they are ready for refinancing, a lot of demand is still going to keep building up. And guess what? These people are also going to come on the market. So right now there's a huge lack of inventory. Whatever comes on the market gets quickly absorbed, as we saw. Owners are locked into their homes. Right now, I've spoken to a couple people. They're starting to almost feel trapped in their homes. They cannot sell because they're locked into those good interest rates, and they are scared on what's happening in the Calgary market and potentially getting priced out when they eventually want to sell and buy a house. But you've really got to understand that if you sell, you can potentially leverage those gains to either move up or move down. So there are a lot of strategies that work specifically for your situation. So if you're in the Calgary market looking to sell, definitely reach out. We can discuss your situation. But also, because of that, there's extremely low inventory. Point number 4, when rates drop, people may sell, but that just adds to even more on the demand. So all the demand that we have from the interprovincial migration right now just sets you the baseline. And so when these new people will be selling their houses eventually, when they can refinance or they have to, guess what's going to happen? That's going to add even more demand. So now you're going to have more buyers in the market, but there's still not enough inventory. And so to me, that dynamic is going to remain for a while now, and it's going to result in that imbalance and hence push the prices up. When rates drop, Calgary's affordability index will go up even more. So that is the key reason a lot of people are moving here, and that's going to get even more powerful. A lot of people that I speak to from Ontario, they are clearly seeing that Ontario was overhyped. It was not all they expected it to be. And guess what? Calgary has been reported to become now the #1 landing destination for new immigrants. We have 1.5 million immigrants supposed to come in the next 3 years, and Calgary is now quickly becoming that top preference for a place to land. Fewer people are going to Toronto and Vancouver because the word has spread. People have realized how expensive it's out there, and Calgary is going to boom. Now let's take a look at the specific data for each property type and what is really happening and break this down. So as you can see, for the detached properties, the year-over-year sales are sitting at 13% higher. Semi-detached is at 16%. And clearly you can see where the demand really is. For row townhouses, we are at 22%. The apartments are at 67%. That's extremely high, guys. And as you can see here, quick call out, I have notes attached to each of these. And so if you download this PDF, you can really look into each of these and see what my opinion is and what's happening. Right now over here, the 16% is up 17% versus the 50% in July. So if we go back to July's data, the demand was roughly 50% here, 8%, 20%, 22%, and 6%. Clearly, all of these have increased a lot compared to last year. So the demand is definitely not slowing as it was last year around this time. And we have had actual sales of 876 apartments. That is extremely high, guys. We are at 772 for the previous month. So 876, we have definitely broken the previous month's records. But then also, the new listings that actually came on the market was only 893 apartments. So out of the 893 apartments, 876 have sold. Our total inventory was only sitting at 964, leading to an extremely high sales to new listing ratio at 98%. I cannot tell you how tight this market is. Generally, I mark anything above 85 to be high, but if you're touching 100, that's insane. And clearly we have not, so the months of supply here is 0.82. At last month we were at 0.85, so it's only gotten worse, which means that's your absorption rate. So the absorption rate specifically for row townhouses is 0.82, less than a month, and all townhouses will be gone. And then the next point of pressure is your apartment. So in apartments, last month we were at 1.44. So you had about a month and a half last month for all the apartments to be sold in terms of absorption rate. Now we're touching close to a month. That's almost a 50% drop. That is crazy. And as you can see, your months of supply year over year, clearly huge declines. So last year you had a lot more time to be browsing properties and buying properties off the market. Right now, you have to be the first one in the door, first one to put an offer and quickly pull it off the market. Otherwise, properties are not even lasting a day or two. So definitely download this document, look into all the comments out here, and this will be extremely helpful for you depending on which house type you're looking to buy. And even after you download the sheet, if you need any help to go through it and understand the stats better, I would be happy to get on a call. Book a call out in the description. Let's get on a call, go through this document together, and specifically focus on the data that you care about. Now you're going to look at the summaries for each property type as per the Calgary Real Estate Board and what they think about the Calgary real estate market. We're going to go over all these highlights. If you would like to read this in more detail, feel free to pause the screen and take a look. But better yet, download your own copy of the PDF and keep it for your reference. So as far as the detached properties go, record low inventory levels this month were primarily driven by pullbacks for homes priced under 700,000. So clearly, houses under 700,000, that's where the inventory drop is happening. And I have been saying this for the last couple months in couple reports, and I have spoken with a couple of realtors in other markets, other parts of Canada, and everyone's seeing something similar. So the houses that are being listed are generally 500 and up in some markets, or 700 and up in some markets. So while we do have supply in that price range, most of the demand is sub 700,000. So that's where the imbalance is happening. And so that's why we have record low inventory levels, because that's all being absorbed. While new listings did improve, most of that is really by homes priced above 700,000, like I was saying. So the houses coming on the market are not the houses people want. And so for the few houses that are on the market and match the criteria for what the buyers are looking, it's all going real fast. Highest year-over-year price gains occurred in the most affordable regions of cities northeast and east. I have highlighted this over and over again. If not, check out my previous videos and you will know why. It was the most underpriced for a long time. They are seeing a lot of price gains now. So depending on your needs, we might be able to get you into those markets. They're still extremely affordable compared to the rest of Calgary. So feel free to reach out and we can discuss further. Now, looking at semi-detached, relatively strong sales combined with low inventory levels have given sellers a huge advantage. And now I live in Southeast Calgary. I heavily service South Calgary. If that's where you're looking, I will really be able to help you. But when it comes to South Calgary, we are seeing extremely low levels of semi-detached houses. It is very few and far in between. I have a couple buyers waiting on a semi-detached, and we are trying to get them in one. It's just not where the inventory is coming on the market. The strongest year-over-year gains were reported in the most affordable districts, of course, the same thing, Northeast and East, most underpriced parts of the market. So they are a rising tide raises all boats. So they are seeing the hugest gains to try and match the remaining levels of the city. When it comes to the row townhouses, our months of supply below 1 month for the fifth consecutive month, so 5 months in a row. Not only have you been under a month, but we are still constantly declining. And so extremely competitive when it comes to row townhouses and apartments, ranging from 12% in the northwest to 29% in the East District. Look at the difference in those price ranges. And so that's where like the East District's trying to catch up. 5 months ago, I was telling you guys it's the most undervalued part of the city. Huge opportunities, and clearly now here we are seeing the outcomes. It definitely has people say the crime rates are higher in the east side. The neighborhoods are not the best, but when it comes to an investment perspective, they have the largest gains because of the proximity to downtown and the accessibility to the LRT and everything else. So I think they will develop really well, and it's just a matter of time. Now, looking at the apartments, again, tight rental markets and relatively low affordability have driven many purchases to the apartment condominium sector. So the rental market, together with people getting priced out of detached and semi-detached, is what's pushing people into apartments. Right now, you might have seen the viral videos on TikTok or Instagram. Lines of people outside rental units waiting to view the unit. I've seen 10, 15, 20 in a single viewing, and that apartment normally has 3 viewings a day. So that's 45, 50 people trying to get into that one single apartment. So you speak to anybody in Calgary, if you're trying to just come in and directly get a rental first, it's going to be extremely difficult. And so a lot of those people have just opted instead to get an apartment because that is still sometimes cheaper or almost the same what you would pay for rental. And it is a great time to get in because the demand on apartments is extremely high. City Center is the only district that did not report a monthly price gain, and the prices are still below their previous highs in 2014. So when you come to like the downtown core, yes, certain prices, certain condos I know haven't really hit that 2014 high yet, but a lot of them have built enough equity and they are comfortable. But when it comes to other parts of the city, people are booking into apartments, and we've broken through the 2014 highs, and now we're seeing price gains. Quickly taking a look at the benchmark prices around the city for all residential, you can see in the north we are at 542, 8% year over year. The northwest is 9.6% higher, which is at 611, one of the more expensive parts of the city, and west being the most expensive at 698, 500, 10% higher than last year. So they are seeing some really pretty good gains. Northeast and east killing it with the gains, but cheapest in all of Calgary. So they were the most underpriced, and now they're seeing those gains. City center is relatively stable, not a lot of people moving, so pretty nominal gains at 2.3%. South is also doing pretty well at 7.9% in southeast, and southwest 7.7%. I'm going to attribute a lot of the lower gains on southeast due to the lack of LRT, because a lot of people who are moving to Calgary are coming from cities that have amazing public transport, and because the transit line doesn't go through southeast, so it is lower on the preference. And I've seen it with a lot of the buyers. They want to be next to a train station when they first move here because they won't have a car. So clearly there's higher demand for northwest and west. But now there's pros and cons with each area. The weather systems in the northwest are extremely different from southeast. So it's nothing like Vancouver or Toronto. There's really different weather system almost for each part of the city. So make sure you reach out and we can get into that detail more depending on where you are planning to live. Now, taking a look at the chart of months of supply versus price change, this gives you an idea of how the market is trended and where we are going. So clearly since Jan-Feb, we've been on an upward trend. Inventory is at extremely low levels ever since 2008. At 2020 is when we had extremely high levels of inventory, and ever since then we've just constantly trended down. And since Jan, you can see the price year-over-year gains have just been constantly going up. So these are two correlated stats that completely make sense of the lower your inventory, the more the demand, your price is going to go on the upward trend. Now, this is a breakdown of all the stats you need to know on a per property level. Definitely download this so that you can look at the property that you care about. I have highlighted the stats that I want to talk about. The days on market for each of these are down compared to last year. As you can see, last year we were at 31 days that a detached would roughly stay on the market. Now we're down to 24. When it comes to an apartment, we're down from 44 to 30. And when it comes to semi-detached, we're down from 34 to 22. And when it comes to row townhouses, we are down from 35 to 20. So there's huge declines in all property types, and also your sales to list price ratio. Clearly, we are selling everything in mostly multiple offers, and people are paying above to make sure they can get the house. So this is how much people are paying above the list price. So this is sitting at 100, more than 100%, 99.48% for apartments. And this is largely, I think, it's not above 100 because of what's happening in downtown. And it's biased by that. Semi-detached is above 100, and also row townhouses, obviously, with the amount of demand and lack of inventory, is 102%. So those are your averages and the key stats that I want to talk about, but definitely get this page. It has a lot of amazing information. Now let's look at each property type by area. So when you count your detached properties, anything above 85% is where you're going to basically think it's extremely high demand and very tight market. So if you're looking for a detached property in southeast or east, you're looking at 99% sales to new listings ratio. That's how many people are looking in southeast. I have a lot of clients also looking in southeast, and like I mentioned before, you're still waiting for houses to come on the market. And same thing with east. East is absolutely on a tear, huge gains, and a lot of people are also waiting because it still remains the most affordable part of the city. And this is directly reflected here. As you can see, month over month, the benchmark price change. You've got to keep an eye on this. This is what's happening on a month-to-month level. So we've seen price gains obviously on the east of 1.59%, leading to those huge year-over-year gains. The only part of the city that's had a minor decline is in the south of minus 0.2%. But this is just generally few properties that either sold because something was wrong with the property or something, and it just pushes the data down. But you can see there's no part of the market that's negative otherwise. It's just constantly on an increase for across the board, just green everywhere. Now looking at the apartments, of course higher demand, so you've got 5 red spots. So if you're looking for an apartment in northwest, west, south, southeast, or east, guess what? Extremely high. I usually mark things about 85%, but we have 137%. That is insane. That is crazy. You are really going to be competing if you're looking for an apartment in the West. Beautiful area, by the way. So that's apartments. And semi-detached, guess what's happening? Again, 5. So what do you notice a trend here? The lower the price range, the lower the house type. So detached, lesser competition. Apartments, 5. Semi-detached, 5 red spots. What's happening in row townhouses? We have 3, 4, 5, 6, 7, 8 red spots. That's above 85%. That's crazy. All right. So for semi-detached, we have northeast, north, northwest, west, and Southeast as being extremely competitive. And when you come to your row townhouses, guess what? Everywhere. Anywhere in Calgary is going to be competitive if you're looking for a row townhouse. Now, if you've been following me, you know what this chart is. And if you have not, you better be, because this is one of my favorite charts. Super easy to explain to my clients, and it clearly tells you just what's happening in a broad spectrum across the market. So this is the total sales month over month comparison all the way back to 2009. So in August 2009, we were just barely almost trying to touch 2000. But now when you look at 2023, we are way above. So we are 2,700 sales. So we are at all-time high in terms of the number of sales happening. So clearly, a lot of people want to live in Calgary, and there's huge opportunities happening now. So when the demand is so high, what would you want? You would want enough houses to supply that demand, right? But guess what's happening on inventory? We're at all-time lows. Again, all the way back to 2009, we have never seen inventory drop this low. And this has been a constant trend for this entire year. And that's why Calgary market is under so much pressure. So it creates a high pressure on prices because these are going in the opposite direction. So the lower this goes, the higher this goes, the more expensive it's going to get. Now, breaking down months of supply into the specific areas and the specific property types, this is extremely helpful. So if you are going to be looking for a detached property, you have the lowest inventory in Southeast. If you are looking for an apartment, Southeast and West are your lowest inventory, but then I'm going to say a lot of these other ones are also pretty close. So definitely reference this document to see where you have the highest competition versus where you're better off trying to find a house. When it comes to semi-detached, highest, of course, in Southeast. Like I said, barely any semi-detached coming on the market in Southeast. And then the next after is West. And rural townhouses, North and South, extremely low. If you're looking or considering to enter the Calgary real estate market or looking to move within Calgary, I absolutely love this chart for you. Great way to determine affordability like I've highlighted here. You first decide your house type, then you decide your price range, and then guess what? You find your location. And if you're working with a restricted budget, a specific house type, this is absolutely perfect. So for example, if you want a detached property, then you say, okay, my maximum affordability is lesser than 500,000. Guess what? Northeast and maybe East is the only options that you have. You could try to look into the ones slightly above, so maybe North, but this quickly tells you where you are going to end up when you do your house search. Apartments roughly are all within a similar bracket, but clearly East wins when it comes to apartments for how cheap they are. And same thing you do with semi-detached and row. And as far as total residential goes, this just gives you an idea if you're open to any property type but just locked by a certain price range, what area you'd be looking at. Hopefully this helps. Next, I want to show you graphs that clearly tell you what I was talking about before when it came to the imbalance between where houses are available and where people actually want houses. So here on the left side, we look at the supply. Majority of the supply is above the 700,000 mark. So 700,000 and $1 million plus, you have extremely very good inventory, right? But where is all the demand? All the demand is below 700. So this is what leads to a huge imbalance. People are coming here for affordability, and that part is extremely low. And guess what? We've also seen a major drop in inventory for this particular price range. So if you are looking for something below 300,000, the longer you wait, the more you're going to get priced out of the market, the more competitive this segment's going to get. And guess what? Nobody wants to buy here. So this is what's happening in the market right now. And definitely get this PDF because this is where I'm highlighting key notes about what's happening on a month-to-month basis, and you definitely do not want to miss on that data. Because if you look at the data for last month, guess what? I already called this out. This is exactly what was happening. And we were sitting at the 500 mark for houses below 299,000. This has dropped below 400, guys. That's extremely low. We are really running out of inventory when it comes to here. So if affordability is your top priority, now is the time to make the move before Calgary becomes the next Toronto. So that being said, let me know in the description, what do you guys think? Where's the Calgary real estate market headed? What do you think of all this data? Get your own copy of this report. Like I said, it's in the description. Go through it. Let me know. I would love to know your thoughts. If you are on the fence and you've been considering moving to Calgary or moving within Calgary, or you have a house to sell and you're looking to move out of Calgary, which is also a valid option, definitely reach out. I can walk you through your personal situation. I would be more than happy. I love discussing data. Would go through this with you guys and then see what's best for you and your family. Hopefully this has helped. Thanks for sticking to the end of the video. If you like this kind of content, make sure you like, subscribe, and share this with your friends if you know somebody who's in a similar situation. And till next time, I'll see you guys.